Hey everybody, welcome back to Lending Leadership. I'm Rach, your host today, and I'm psyched because we've got Tom Mills here. A little bit of a different setup with these bonus episodes where it's a sneak peek into getting to know the leadership and your hosts of Lending Leadership. So Tom Mills, managing partner of HMA Mortgage. Hey buddy, how are you?
I'm doing great. How about yourself? Excited for today. Usually I'm battling through these guys to get a chance to talk, but I don't know what you're going to throw at me. And I came guns blazing prepared. So let's go.
Yeah, that's a good thing you brought that up. I love the dynamics of the three guys, you, Robert, and Dave. And it is kind of nice to have this one-on-one time with each of you to just have your spotlight, your time. I mean, you're each really dynamic leaders and have lots to say, but yeah, it's nice to not have to totally share the spotlight. You'll have to share the spotlight with me.
Yeah.
That's okay. I'm a good sharer.
Let's be real. It's a total excuse for our inability to get coordinated for the three of us to be in a place to do this podcast together. So we're kind of breaking off in these one-on-ones, which, hey, not a bad idea. I get it. We can roll with it.
We can roll with it.
Things have been hectic lately and people are all over the place, but things are good. And, we got to keep the podcast moving. We committed to it. And I know that, we've got to get these done.
Well, it's really interesting you say that, Tom, because that is such that really is what leadership is about. We created a goal. We really wanted to do this podcast, but nothing's linear, right? And nothing ever works out so perfectly like we think it's going to work out. But that's one of the rules of leadership, isn't it? You got to keep going. And if it doesn't work out the way you think it's going to work out, well, we get to write the rules here.
Yeah. I mean, there's no exact playbook, so you don't, just the plays get thrown at you, and you've got to react to them. And
well, I mean, who better than you to know that, right? In this industry, and really any industry, when you're managing partner or you're in a leadership position, you get thrown a lot of curveballs, and I mean, we have our ideas of how we want our day to go and our week to go, our months to go, but a lot of times that doesn't work out like that. I mean,
yeah. I mean, I visualize that perfect day, right? But I'm very prepared for, the wheels to fall off at any time, or, know that things don't necessarily go perfect. But that's how you visualize it. You do prepare. There's something to be said for that. And when you have that, put things in place for perfection, you're more likely to achieve it. But perfection really rarely exists in this industry.
In anything. And I think giving yourself grace and being like, hey, this is our game. We get to roll with this how we want. So
that's right.
I think that really speaks to your leadership styles, not being so rigid, but like having a plan, but then being able to fill in the gaps where you need to.
Calm, cool, collected. Let's keep it moving.
That's right. Okay. All right. So my first official question is, what's one thing that people might not know about you by just looking at your LinkedIn profile? Sometimes on the corporate side of Tom Mills, or the corporate side of any leader, we have the image that we present and the facade, but what's something that people maybe wouldn't know about you?
Probably, the reality is I'm not the most interesting man, so I'm not that hard to figure out. It's kind of what you see is what you get. I know you have been telling me I'm not active enough on social media. I don't bring out my leadership enough on social media. I do have, a light presence and whatnot, but I'm not the what they call the thought leader today on social media, and I think so. I would go down that path. Maybe I am more of a thought leader, more relevant to understanding this industry and what originators need and branches and what it takes to be successful. I would say they have a lot more to provide on that than my social media would say. And I think the reason I say that is I think people like that term thought leader, a lot of people, are really active on social media, with posts every day or intriguing conversation that, brings all these eyeballs to them and people into the conversation. It's not really my style, so I would say that, I'm a thought leader, but I'm very, very in the trenches, not really putting thoughts out there into the universe and hoping someone catches into it and we can have conversation. I'm more about, strategic thought. As you know, I'm very, very connected with our sales force, very connected with,
You are.
our operations, very connected with, marketing, very connected with originators and the needs and trying to grow business and market. And I would say that if you look at my, profile, and I wouldn't say this, you've told me this, you don't necessarily see that.
That it's funny because I had forgotten that. But it's kind of the reverse, and sometimes people are putting so much out there, but then there's, I don't know, they're missing something. So
I'm
yeah, you're
definitely
right.
doing more than I'm talking about. Now, some people could be talking
Yeah.
about more than they're doing, but I know I'm definitely doing
Yeah.
more than I'm talking about. But in fairness, I'm not there talking about a whole lot.
Yeah. Well, and which is better? I mean, maybe it's a
I
matter
don't
of
know.
there's
I
a
don't
there's
know.
a lot of people. What was it? The Wizard of Oz quote from the Scarecrow. You know how much I love the Wizard of Oz. That the
Yeah.
Scarecrow says, people with no brains do an awful lot of talking. So I would rather be someone who is the thought leader, doing the work and in the trenches, in the day to day, but
Yeah.
not necessarily out there talking about it, showing it. I mean, that's important too. But yeah, that's where we come in marketing, and we're trying to help all of our leaders boost it up a little bit and show what they're doing, because you are constantly, I mean, I've seen your calendar. It's all day. You are in the trenches with your staff, with your team every day.
I love what I do. Fortunately.
Yeah. Fortunately.
Very fortunately.
What if you didn't love what you do? What would you do? What would you be
I'll
doing if you
tell
didn't
you,
love it?
and you really, I feel blessed that I ended up loving an industry that's very rewarding, in many ways, but it that's a great question. Because as you grow older in life, you hear that when you're younger, as you grow older in life, like that resonates a lot more. Like you really understand. I know I'm sad for people that don't do something that they love. Get out and change. Do something you love, folks.
Yeah, I know. I think life's too short to be in just a rut or be that hamster on a wheel. If you don't like it, change it. And I guess that's easier said than done. That takes a certain kind of person and courage to do that. But for the people that are doing that and love what they do and maybe took a step out and took a risk, good job. Good job on you. And you took a
Absolutely.
risk, Tom. This past year you decided to leave an organization and start something on your own. I know it hasn't been easy, but what path to success is?
Oh yeah, I mean, you've got to get outside your comfort zone, take some risk, calculated risk, but yeah, I mean, I think that a lot of people, that haven't done that in their career, I bet they look back on their career more and say, "I wish I would," and I really don't want to live with that mentality, and anything that I really do is I wish. I think it's all just part of the process. Just sometimes the losses come along the way. That's part of winning. But yeah, I've been pretty fortunate. Had a pretty good. This industry's treated me pretty well.
Yeah, that's true. I like what you just said. In order to win, you got to lose sometimes. And
Oh, absolutely.
again, no journey is linear. It's not just, oh, well, I moved from point A to point B and it was just so seamless and everything worked out. There are setbacks, but there's a lot of reward too. So going along that mentality and that idea, I always like thinking about the fact that if you could time travel, if you go back in time to that first year in the mortgage business, what's one piece of advice that you would just slap on a sticky note and put on your desk as a kid getting in this industry? What's one
Like
thing
me speaking to me.
to you? Yes.
uh, I think I would tell myself that You're saying my first day in the business, right?
Yeah, first day,
Yeah.
I mean, really just first year in the mortgage industry,
Yeah.
first experience. Yeah.
I think back, when a lot of people get into something, they're real excited about it. They're all in it. And they want to learn. They want to embrace. They're trying to, absorb as much as they can absorb. And I was definitely that guy. And I would say to always be that guy. Always have that like day one mentality of there's more to learn. You can get sharper. How do I do that? I think I went through a gap in my career where like I think I had like immediate success. I did have some immediate success, so it made me kind of take some things for granted a little bit. And I was fortunate to kind of have success without really sharpening up. But when I started to, I guess, invest in myself more, whether it's
Sure.
time or education or coaching, it's really when I took off. I've had a 20-year career that, the first 10 were like great, but is I think I learned so much in those first 10. And then what I learned is I need to keep learning. And I needed to not get complacent, and not think I was the best or there was a long way to go. There's people doing amazing things in this business. I wasn't taking any note of them when I was younger in my first 10 years. So I think I was just like comparing me to me or me to my friends. But I realized, hey, there's ways to get better out there. And I adopted a little different mindset that really I think played a significant role in the next 10 years.
That's really honest. I think gosh, when success comes really easily and quickly, sometimes we can have that, maybe it's a good swagger to develop, but you don't want to have that cocky swagger that then, you hit that ceiling.
Mhm.
Because it's great to have that success early on, but that's really honest. I mean, to always have that sense of wonder and that sense of excitement as you do when
Mhm.
you're first starting something is really important. And yeah, I like how you said invest in yourself.
Yeah.
A lot of times people will see something and it's like, oh, well, I don't want to shell out money for this, but it's a mindset, it's a perspective. If you're looking into coaching and it's just, oh, I don't want to pay money for that versus, oh, I'm investing in myself, much different mindset, much different perspective.
Yeah, I mean, assess an ROI, believe in yourself. If you hire the best coach, do you think you can get better? I mean, I think it takes a really stubborn, closed-minded person to say no to that. Outside of that, though, I would say to me, from that very first loan I closed, keep record of that of all my funded database. And most loan originators at some point in their career started really maintaining a database. But I think also most of them that have been 10, 15, 20-year veterans of the business look back and it's like there was a gap of where they don't have that and didn't really understand the ability and the power in marketing to that. I would go back, know that from day one, know that those hundreds of people I'm closing a year, they're gold, their friends, families, their coworkers. Their average person does 7 mortgage transactions in the course of their life. They have multiple friends, family, coworkers. I would have worked that database completely different from day one.
Oh, wow. So when did you start? I mean, it was a different game back then. Technology has moved
I mean,
so fast.
CRMs weren't the same, but look, people still. I know people that did their mails every month, and it's the same concept, right? At what point did I, certainly within the last 10 years, about when that point when I started saying, okay, there's more ways out here, and people are like, oh, you should be funding, X amount of loans off a database like that. Wait, what? So you
Yeah.
start looking at what are those strategies. I always felt like, stayed in front. Like what I had always done was the strategy of rates drop. Let's call these customers between this rate and this rate, they're eligible. And, instead of like closing, setting that expectation, like you use those phrases in sales, like I'm going to be your lender for life, but then it was like, one night stand until I could, potentially saw I could do something for you again. That was the mentality of the young part of
Yeah.
my career, because I didn't really understand that I was building a business. You know what I mean? I didn't understand that every closing led to another closing, led to another relationship. Like those concepts, they weren't engraved into me then. I came into the industry in a time that, it was subprime days. And it was, my first several years were lead based, where it was lower my bills, lending tree, direct mail. It was very transactional. It wasn't relational. That didn't come to me from a relationship. And it was multiple states. That was before state licensing laws were there. And even after that went into place, carried multiple state licenses. And that was a good living. It was a great way to come in the business, great way to learn the business. Got a lot of loans to work on. I think I closed 11 loans my first month in the business. Like, people don't come in and do that today. So it was just different.
That's interesting that you bring that up, the transactional experience versus the relational experience, because I feel like, fast forward to where we are now, where do you think we are now? And where do you think we're going?
The relational business is the direction that the most successful will go. And I think that it's even down to marketing. When you think about a relations, how does that impact your business? Well, your relationships are what brings opportunities your way, realtor, builder, financial advisor, your past funded database, sphere of influence, these relationships. And then, relationships are who you depend on to close your loans internally. And the team that you depend on. And you're doing it for customers, that you're building relationships because you hope to do, more transactions for them in a genuine way. And then I think from a marketing perspective, that's important too. When you think about it, today's generation, it's like they want to do business with what they're attracted to, so if, their favorite, athlete starts wearing this brand and they're showing that on Instagram, then they want to wear that brand. So, I think that how you build relationships, and with your customers and market to those customers, I think that's very much what makes a customer gravitate today towards a loan originator or a real estate agent. They look at is that somebody I like, and I think that's what moves in marketing now. People buy what they like, the influencers, and not that I think mortgage or real estate agents are here to be influencers, because that's what they do for a living. But they want to be able to influence the type of customer that they're trying to influence. So you can build a relationship with that customer before they have a need. That customer following you, finding valuable insights provided. You're the subject matter expert. Then when they have a need, they come to that subject matter expert. So I think, building relationships before there's a need is key and really important. Otherwise it's how do you build a relationship once the kind of transaction starts? And then what do you do to build a relationship that, creates more together?
So it's a lot of psychology too. Communication psychology. Yes, we have to know our craft and our trade and how to close loans, but a lot of it's how to foster relationships. Like,
Yeah.
is that one of the main differences that you see? Or maybe there's something else that you see between the good loan officers and then the exceptional loan officers?
The more relationships you have that are valuable relationships in this business, generally the better you are. But if you're asking me the difference between the good and the great, essentially,
Yeah, yeah,
I'd probably go back to where we were at just a little bit with that day one mentality and that
yeah.
constant thirst of knowledge, that ability to pivot, markets change, staying in front of things. That is absolutely what I would what I would say is the big difference. It's a different level of commitment that the top make.
Yeah, because you've coached a lot of people, you've mentored a lot of people in the industry, and sometimes I mean, this might be ridiculous, a cheesy analogy, but I always use the analogy of boiling water, right? If there's
Mhm.
a 1 degree separation, or freezing water, right? There's a 1 degree separation between boiling and not boiling. And sometimes people it's like, come on, just push it just a little more, and that would push you over the top. Like, I'm sure you see that with people that you coach.
Yeah. It's not just like this extra more. It's just how much you do what it is that you need to do. It's the consistency that you do everything with, really. In addition to that mentality, it's about consistency.
Yeah. Gosh, that's with everything in life, right? No matter what it is we want, whether it's doing anything better, going to the gym, or, whatever we want, it's that consistency. That theme just keeps popping up in everything that we talk about.
Yeah, most people want instant gratification with things, and the best things, instant gratification really doesn't come. You really work
Mhm.
towards it, and you gain that through consistent efforts, and very much believe in those concepts.
Yeah, I know we do. We are an instant gratification kind of society where if I can't get what I want right away, then I move on to the next thing. And yeah, the best things do still take time.
Yeah.
And moving along, I guess along those lines, I think every leader has maybe a mantra or a theme that they live by, words that they live by. Do you have anything that drives you? Even just a simple, like good old Nike, just do it. Do you have something that really drives you, or that's your go to?
Oh, that focus on the controllables. Like I've always, I think I was told that, like I literally was told that in training, and my first job in the mortgage business with AmeriQuest Mortgage. I remember that coming out in training, and I remember, our like regional manager coming to office and having a talk about that, and like focus on your controllables, your effort, your attitude, your approach, your consistencies, that is that is a phrase I use very often. I think it's, anytime that something, it's a great phrase to use anytime anything in life, forget business is tough. It's like, okay, what can I control? And that's generally how I move on from any challenges, is like, I can't tackle maybe the whole challenge, but there's an aspect of that I can control. What can I do about that? And start to take control.
Yeah, I know. That's true. I need to hear that again.
Mm,
I'm in that phase of life where sometimes things are just out of your control, whether it's, you're right, family things or kids getting older, or, I know recently in the past few years, you have really made an effort to even just get up and go to the gym every day. That's something that you can control.
yeah.
And I think that does play a part in leadership too. Just waking up and having those, you guys have talked about this in the podcast also, having those things that are the non-negotiables. Like, nope, we are not going to cheat on ourselves with this. And I feel like that really does help to keep that sense of control.
Yeah. Yeah.
So, with this lovely industry that we're in, Tom, the mortgage industry that's constantly changing, what do you think is the biggest shift that you've seen in your career? I mean, granted, that's probably a loaded question for what we've gone through the past few years,
Yeah.
but what do you think's been the biggest shift, and how have you adapted to that? We've kind of had to be chameleons.
Yeah, I think I've been through a lot of shifts. I came in when subprime was still, big, and before the option arm loans and the crash, and having to adapt from the crash, and then, regulations that came for the next decade after that, and CFPB changing things, and Dodd-Frank, and through different mortgage markets, and peaks and valleys, and the boom of COVID, the downfall. Honestly, everybody always talks about the past, but honestly, if I were to look, the biggest shift I've seen is right now, to be honest with you.
Yeah.
It's like current today. This time we're in, these last several months, now the next several months, I think it's a huge shift. I just seen that. I don't even know how true it was, but it was like 446,000 originators were had closed at least one loan in 2023, and then it's down to like 96,000 or something like that in 2024. There's a reason for that. There's a change happening. Business got different. It got tougher. There's a little bit of a cleansing, a little bit of the strong survive, a little bit of, that was oversaturated. It was looked at like this business, easy to come in and make relationships. And there's always easy to come in and make money. And there's always
Mm.
times in this business that are really easy to come in and make money. And people are like, oh man, those mortgage guys or girls, they've got it made. They got it made like 2.5 to 3 out of every 5 years, and the rest of the times are really, really tough. So people came into the business, so it got more flooded than it was. Every car salesman that weren't selling cars are like, hey, those mortgage guys are working from home, and people were shifting from different sales industries. I remember getting so many calls from different people I knew. But things changed. The industry changed. Never before have I seen that statement of the definition of insanity, doing the same thing over and over, expecting a different result. Like everyone had to change. If you were even going to stop your business from dropping by 50%, you had to make some changes. Your staffing probably has changed over the last couple of years. You've had to make changes on how you market it. Even in like times like the typical time in the business, like you see, the good easy times are when it's like 20% of of what is transacting in the mortgage business is refinance. Like that's a great, like, stable place. When you're transacting like 50% refi, there's never a world that like 50% refis are happening and purchases are down. So that's when things are like really, really crazy. But we went through, a world of, less than 5% refis, long
Mm.
period of time where, refis only happen for a need, divorce, a need for cash out. Most people, took advantage of things in 2020, 2021, took advantage of lower rates. Um, Now we're coming out of that. Interest rates haven't necessarily moved so much. Cash outs becoming more prevalent as you're seeing, the nation get more and more in debt. We're
Mm.
seeing customers go to that cash out. So we're kind of coming there, but it's been a tough run. The last really 12 to 24 months. I would say that is the biggest shift I've seen. I think a lot of companies and loan originators are trying to reinvent themselves. They're dusting off their glamour shots and their from that they got from 1994, and they're like, oh man, I got to go get new marketing, and I've got to figure this CRM thing out, and you
Mm.
know no, I've just seen a lot of people that, never felt the need to evolve to certain things and still be able to maintain like success, making six figures. That easy streets, like, it's gone. They've been forced to step outside of the box. Everybody that's survived and not just thrived, if you've thrived at all in the last 12 to 24 months, you have absolutely put yourself outside of a comfort zone way
Yeah.
more than most, and that's why you shined. You adapted, you changed, you realized that COVID changed everything, and how you went to work every day to how you dealt with your customers to every aspect changed. And I think it's just not just our business, but our whole lives kind of shifted in this time, right? So
Mm. Yeah.
of course you have to shift business to kind of align with life's changes. And so much more people are remote now. You depend on more people remote now versus they're in the office. And it's just a lot different than the last 2 years. But I will say this without question, I've learned more in the last 2 years than any other period of time in this industry that I've been in for 20, almost 21 years now. I've learned more in the last 2 years, hands down. And because, that day one mentality, like there was giving me a lot to learn out there, and learn and
Yeah.
understand and comprehend and break it down and really understand what is happening. I really learned a lot, and I think that is going to be really key to leading to the next 10. I opened up, we talked about how I wish I learned for the first 10, and then I, spent the next, 10 years learning. And I'm really excited for the impact and results of what that does for the next 10.
Do you think that mentality is true for those 90,000 some loan officers who are still in the business? Like, of those 400,000 loan officers who were here, if they got out of the business, the 90 something that are still left, do you think that we all have to have that mentality? Like, is that the key differentiator between people who are still here and the ones who jump ship?
I believe most likely yes. I still
Mm.
think there's some that jump ship. I think too many people adopted. I say yes, but then like there's that whole like slogan out there, which I think is complete bullshit. Like
Ooh.
survive till 25. Like if you're just in it to survive, like you're probably really stumbling right now. Like you're
Yeah.
feeling like you're just surviving. You're not feeling anything that's really thriving. That's a bad mantra. I don't know who created that, but
Yeah,
thrive
I've
in
heard that.
24, baby. Like there's people that thrived in 24. Go after it. Change the people. Anybody that thrived, anybody that some people. If somebody said they had their best year, or they put up even near some numbers they put up in 2020, 2021, or they exceeded their 2019 numbers, they absolutely positively stepped outside the box, embraced things, learn, try new things, got uncomfortable, fell on their face, got up, fell on their face, got up, fell on their face, got up, and figure and started to figure it out along the way. That's a reality. It's been an interesting business the last couple of years.
That's a sign of a true champion in my book. When you can fall on your face and get up again and get up again and get up again. It's just the integrity and the grit that takes. I mean, that it's not for everybody. And I'm not faulting anybody who got out of the industry because of that, but wow,
Yeah.
that is a champion to me. What do you
Well, there's
think that
way more losses in this business than there
Yeah.
is wins. The wins just so
Mm.
greatly outweigh the losses. Like it's kind of like, in baseball, if you bat 300, you're in the Hall of Fame. That means if you fail 7 out of 10 times, you're in the Hall of Fame. And I would say this business that's kind of what it looks like. You fail 7 to win 3, and that's a winner.
Yeah,
That's a Hall of Fame player.
I know. Not many
How quick do those 10
industries.
come is the question. How quick do you bring those 10 to get 3 to hit, is the question, I think.
Yeah. What do you think that people who are outside of the mortgage industry would be surprised to hear, or maybe something that they completely misunderstood? We have a lot of people who listen who are in a leadership role that maybe are in finance, or maybe outside of, maybe there are referral partners, realtors, insurance, or who. What do you think people would be really surprised, or even just that they misunderstand about what we do? Is there a common
Yeah, I
misconception?
mean, I would say the grind, like the amount of work it takes to close a loan, not just the amount of work, but the amount of people and processes and systems that are involved, to every person that's involved, to, the verifications done behind the scenes, the deals that, aren't perfect, to the amount of grind and hustle to get those deals done and get them done in time. Nobody's paid until the deal is closed. I think sometimes customers don't think that about originator. That they're not paid by the hour. They get paid to close transactions, and maybe certain customers abuse that and don't treat originators with respect like that. But the grind, the number of people that touch a loan, you've got your disclosure, your originators, your assistants, your disclosure people, your intake people, your processors, your closers, your title company, your underwriters, your underwriting management, your your MI companies, your condo department, your, you know, on down the line, to post closing, to, the people that are shipping a file, to, the loan being received by an investor, sold. Like, there's a lot of steps along the way. It probably, on the outside looking in, it's really complicated. There's no way anybody not having any understanding of this business could look inside and realize how complicated it is to get that mortgage done. Like, Rocket Mortgage goes and sells, Rocket Mortgage. I mean, it's not press button and get mortgage. We say that all the time. Like, that's not the world that we're in. We never quite will be. It's really about how easy you make it look. And that's what you want for your customers. So sometimes that's great. We make it look really easy, but they don't have any understanding of how complicated it is. We're supposed to make it look easy for the customer. That's a lot to their experience. They like to do things that are easy. That's frictionless to them. But even on the most frictionless of transactions, there's friction happening within that took to get there. So without question, yeah, the grind, the people, the amount of work.
Yeah. Yeah, that's true. Forward facing, we always want the customer to not feel that, but sure, in the back end, to see all the wheels turning together and all the hands that have to touch the file, and to make it seem like, okay, behind the curtain, pay no attention what's going on behind the curtain. Forward facing, we want them to feel really good. Just to wrap this up here, Mr. Mills, what's something, looking into year 2 of this whole exciting journey we've been on, what's something that you are very excited about? Is there one particular thing that you look into this next year and think, I can't wait to do this? Or all of the above? You can't wait to do everything.
A lot. Yeah. I mean, look, I'm super charged up for, this next year. I mean, if I talk about HMA, I mean, we're really coming into year 2, since we kind of came together, took a different turn together just over a year ago. We're turning into a year that, we're over 300 employees. We're 13 months ago, that number was in the 60s. So I think what I'm most excited about is the culture of those employees, how that's being built. We took a lot of steps on that in year 1, but we have a really clear vision. I'm excited. It's not like the vision ends or anything like that. I'm just excited for the steps along the way, to seeing that vision through.
I love it. Well, thank you, Tom. Thanks for this time you gave me today and insight. I think it's always nice to have, like I said before, this one-on-one time just to get to know our hosts and leaders a little bit better.
Thank you for not throwing me a lot of curvebballs. You really didn't make it too complicated today. I thought I'd get something real corny about, like, if someone was acting for me, who would it be? And, what's the scene, a dramatic scene that would be in? I thought I would get like some deep shit like that. So thanks for keeping it simple.
Now I feel like I should throw you a curveball just for fun. You did that. You just did that. So now you're getting a curveball because I can't let you off the hook that easy, because I was very tough on everybody else. So how about this to end with, because you just shot yourself in the foot. Ready for this one? Tom, if your leadership style were a coffee order, what would it be? Would it be something bold, something smooth, maybe a shot of espresso, maybe a cafe grande mocha? What would your leadership style be if you were ordering at Starbucks?
That's interesting. I'm just, I'm a dark roast, bold, smooth, not too hit you too hard. But yeah, I'm just how I drink my coffee. I'm a venti, hot black, no room. I'm not putting any cream in that. That's kind of what I am.
Straightforward, to the point, get the job done. I like it. We're going to end there. What a better place. Thanks, Tom. Hey, everybody, make sure that you like and subscribe Lending Leadership. We come at you every Wednesday, new episodes. And thanks again, Tom. This is fun. Bye, everybody.
Thanks, Rach. Bye, everybody.